Hope you guys had a great New Year's, and I think it's important we get into some technical analysis for the SPY, Qs, Apple, Tesla, Amazon, and NVIDIA, as we do have a shortened trading week early on in the month of January, and we do get FOMC minutes, so let's get right into it. All right, first thing on the SPY, we have updated those weekly expected moves. So to the upside, we have 481.06, and to the downside, we do have that 469.56, and then the monthly expected moves for the whole month of January, priced in from the options, is 490.41 to the upside and 460.21 to the downside. And I believe that this bottom side is going to be very important because it's sitting around that liquidity zone that I really like. And if we do come back within this area early on in January, we do have a 60% chance to land back within these yellow lines. So if we do get excited and we get outside of it, we could see a bounce back up in this zone. And we have ended the past 2 months outside of these zones, which is kind of rare to see. So we want to pay attention to this because I think it means going into this month, we have a very good chance to land back within this zone in the month of January. On the SPY, we did get that MACD to roll over, and you don't necessarily have divergence up here, but you do have a little divergence on the RSI, which just tells me, hey, I should be leaning towards more of a pullback. And the reason that it could be a dramatic pullback, a little bit more dramatic down to this area, maybe to test the 50 at this point, is just because this is a very, very strong run very, very quickly. If this had more structure to it, yeah, we would be looking for maybe minor pullbacks at this point. But I think because we are overextended and we do need to see lower levels maybe to go higher and get some kind of all-time high in the SPY, which I am still leaning towards, maybe we do see some selling in January and then we're able to see that buyback up by the end of the month. So I'm really going to be paying attention to the MACD over the next couple of weeks, see if that's able to roll down, give us some kind of steep pullback, and then roll back higher. Now, to the bull side, we actually could go up from here and make that all-time high first. I believe that we could see more dramatic selling if we actually do get that all-time high narrative. So I'm going to pay attention to price, but really be paying attention to the top side of this channel that we're in at this point, right? We're in a big channel. So we want to pay attention to the upside of that channel, which would take you outside of that weekly expected move. So if we do that early on in the week, look for this to, come back down, because 68% of the time we do like to land back within these weekly zones. Now, why we're talking about some upside is because, we're still in positive territory. So even though we're seeing, price dying out, we're seeing some wonky price action and things like that, we're coming up into overextended areas, we could still see this get some positivity, right? So we want to pay attention to that going into next week, just because we're not into full negative territory yet. We haven't started that negative trend. Really what we would want to do to start a negative trend is probably come down to this area, test this low in here, maybe get some kind of bounce and then break it, make a new one, getting you deeper into that negative territory and really telling you, hey, we're flipping into a negative trend. And what that would look like from here would actually be some kind of head and shoulders. We want to pay attention to both scenarios at this point, but we can't say, hey, the 2 hour is bearish on the SPY, because it is in positive territory. We're in positive territory. We're setting up divergences, but it doesn't mean we can't make some kind of, this is kind of the bigger divergence going on at this point. It doesn't mean we can't come up and make another point of reference for that divergence before we want to head down, getting a little bit closer to that negative territory. The Qs on the daily, we have updated the weekly range, okay, 415.82 to the upside, which sits right at where that this wedge that we're actually in the Qs is happening. So we want to pay attention to that early on in the week. And then to the downside, we actually do see 403.22. So really be looking for these types of areas to hold up this week, because that's all options have priced in for the week. 68% of the time we do land within that zone. The monthly expected moves to the upside, 427.42, and to the downside, 391.62. And you'll notice about this 391.62, we were talking about in previous videos, this liquidity in here coming as important. It's going to be sitting right around that 50, and we could see us get out of that early on in the month of January, and then 68% of the time we do see us land back within these yellow lines. So it's something to pay attention to. And overall, we just notice there is that divergence on the RSI, but it's not on the MACD at the same time, right? This is coming slightly up at this point. So we can say, hey, this most likely will be some kind of pullback and not necessarily some kind of big daily trend reversal. Now, in the 2 hour, we have slightly broken through this thin wedge. Just tells you that a big move is coming. Now, we're still holding right at the bottom side of this wedge. It's getting very tight, so we could see an explosive move. but we're still in that positive trend. So if this did want to roll back up, create another point of divergence between all this, that would make a lot of sense and then get you real close to that negative territory and then start to break down, right? So we could see some negative trend in the near future, but you are holding up exactly where you need to, and you kind of need some positivity on Monday to continue this positive trend. So really be paying attention to the upside, that 415.82. Believe it could be important early on in the week, but we're open to everything because we could see, some kind of breakdown, test the bottom side of this, and then bounce back up, and we see kind of what we saw in the SPY with some kind of head and shoulders. So it's a time to, be cautious because we're overextended, but this could take some time to actually break down. Apple's one I am going to pull up the weekly just because it's a little closer to crossing. We were paying attention to Apple because we have that divergence at the same time. Okay, so we have a divergence on the MACD. We see the divergence again on the RSI at the same time, and that's why we paid attention to it. And I told you, this really did flip to bearish. We're seeing us form, even a flagging, even though it's a little bit more dramatic. We are seeing some flagging in here. Now, the downside expected move is within this zone. It's kind of towards the lower side of this zone. We would be right around that 50 if we came into that area. So this is where I'd really like to see a bounce. So I'd really like to see a bounce in this area, see if this MACD is able to curl up. If that does curl up, it's in positive territory. We could see another push to come test the top side of the wedge that we're in right now. So it's something to pay attention to. Now, how this could play out in a different way if we do get positivity early on in the week is if we're going to go up, the upside expected move is actually towards this high up here. So we could set up some kind of right shoulder. You'll see this left head, right shoulder, and maybe that's what's able to break us down into this zone and come test the 50. I'm really paying attention to both of these options at this point, and I'm just going to follow price throughout the week and see which way we go before that FOMC minutes. Now, something I like to do when I do see those divergences at the same time is I'm looking for a little bit bigger of a pullback, and mainly that just means, hey, we can at least come to the 0.382. We can come to the 38% fib retracement, which you'll notice is right at where the 50 is right now. It's right within that zone, and guess what? That weekly expected move to the downside is there as well. So it looks like a very good area for it to bounce. And the good part about this is if we're going to see more dramatic selling, usually if we get through that level, I really start to pay attention to my golden pocket, which is right in here. The cool part about this place right here being our golden pocket is look where we really exploded in Apple after we broke out of that wedge back here. Well, it was right where that golden pocket is, right? When we saw buying in that area, we really saw that explosion. So both of these levels could come into play. One of them is we hold up at a little bit higher levels, but if we see more dramatic selling, I'd really be paying attention to this about 178 level. I'm just going to show you Apple on the weekly just because it's a little bit closer to crossing. So if we don't want this to cross, we're going to need, price to buy back up in the next 2 weeks. So what could be happening from here, you see this 20, which, we like to do on the weekly scale a lot of the time, might even be in that zone by the time we test it. So we want to pay attention to this over the next 2 weeks, because if this is able to cross, it actually is a signal. And if we do break down below that 20, it is a signal that we might come test the bottom Bollinger, which could break you through this wedge. So Apple is a good thing to pay attention to if something more dramatic is going to happen in January, but I'm not necessarily leaning towards that at this time. I really think that Apple has a good chance to head into this zone and see some buyers step back in over the next 2 weeks. Amazon, you do have this slight divergence on the MACD, but you don't have it on the RSI at the same time, right? So we don't have it on the RSI at the same time, which just leads me to believe, hey, this might be, an overall pullback. And the good part is Amazon has great liquidity in here. So if it just wanted some kind of pullback into this area, your weekly expected move is right around here, I believe, and you'd be right at that 50. So if you are a part of my Patreon, you have those exact levels at this point, but it is within this liquidity. So we could see some selling come in and then head to higher levels with Amazon. So I'm really going to be paying attention to a lot of stocks in January if they are able to cross back up in positive territory on their MACDs. Could mean we do have another leg higher. I think we really want that SPY to new all-time highs narratives really kill out all the bearishness before we actually see dramatic selling, because when we do get those rate cuts, we actually do see selling come in. Now, Tesla is something I am staying a little bit cautious on this week because it does have a pretty big expected move. I believe it's 35 points up or 35 points down. So it's something to really pay attention to. And the reason that we could see a little bit bigger move this week is because it didn't get very high up on this MACD, right? This push did take a little bit of time, but we're not really in that positive territory too far. So if this wants to roll over, right now you're getting that red bar on the histogram, so it has rolled over. So if it gets into negative territory, we can see a little bit more dramatic selling. You'll notice that right over here. Once we do actually roll over into that negative territory with these few bars in here, we see dramatic selling come. So it really tells you how, with the technical side, if you get into this negative territory, you can see something more dramatic happen. So I'm really paying attention to, to the downside. I'm really paying attention to this 200 at this point. We could see that as a good level, right? We've held up from that level a few times. We saw buyers step back in, and maybe they do that one more time, testing the bottom Bollinger, the 50 and the 200, all kind of at the same time. Now in the short term, right, we really want to pay attention to these areas where we did see that resistance come in, we get excited, we get outside of it, we see that resistance come in, we get rejected again, and then when we explode through this level, we actually do see some more positivity after we test it. So that where we're at right now is going to be very important. We could see a bounce early on in the week. So if we do see some kind of bounce early on in the week, if we go into shorter time frames, you'll just see this could be a left, we could get ahead, and we could get some kind of right shoulder form over the next couple of days. Going into the shorter time frames, you can see how we'd have a left, we'd have a head, and then if we actually do bounce from this level, we could see some kind of right shoulder setup, and we're right next to that positive territory. So if we wanted to head to lower levels, that would just roll over into negative territory pretty well. You're really looking for that to get deep into that negative territory to start a little bit of a negative trend, give you some kind of pullback, which is overall what I'm leaning towards. But like I said, I'm open to both scenarios. I'm open to bullishness, and I'm open to a bigger pullback. I'm open to even a crash at this point just because of those weekly charts. So that's something I'm really paying attention to. If we do see dramatic selling, we would be breaking through this wedge at this point, and we most likely would be coming down into this area down here around that 230 level to test to see if some buyers could step in and bring in some positivity, possibly with earnings on the horizon. NVIDIA last week, I was paying attention to, 502 or 507. This week, I'm really paying attention to 512. Now, this bar that we got on Friday is kind of a hangman candle. So this is a reversal bar. It means that kind of momentum to the upside is dying out, but you do still have that chance that this is a big ABC to the upside. So I wouldn't be surprised if we do go higher. Now, if we do get excited and get out of 512 by, early on in the week, I'm really going to pay attention to some divergence forming up here, crossing on this MACD, because at this point, you don't necessarily have divergence. So to the upside, I'd really be paying attention to if we get excited early on and get outside of this 512. And then to the downside, I think that the expected move for the week is pretty much right at this low. So I believe we could actually come test this low over the next couple of weeks. And that's really what I'm leaning towards. That would be getting you into negative territory. So if you do lose this low, you do have the potential for a negative trend beginning on the daily scale. So we really want to pay attention to this. I really like this zone, but at this point, because that expected move is right here, I'm going to be paying attention to that low and see if it's able to get broken. And the reason we're saying there could be that positivity is because you're still in that positive territory. And that's why we can't really be too bearish on even a 2 hour at this point, because you're still in positive territory. If that was getting into negative territory, I would be able to be a little more bearish. This could be some kind of flagging at this point. And maybe we're about to start that with a new low breaking this one. And maybe we're going to come test the bottom of this pretty quick. So we want to pay attention to that this week. It's important to pay attention to what stocks do before something big is coming out like FOMC minutes, when we are pricing in way too many rate cuts, because we could see those yields head higher, and that will be bad news for the market. The last thing about NVIDIA I wanted to say on this 2 hour, if it actually does roll up and get excited above this 1212, you actually would get a little hint on that daily divergence, possibly, forming and actually confirming, because you would have maybe a 2 hour divergence. So you could create some kind of 2 hour divergence. You'd be pretty dang close to that negative territory, ready to start a negative trend. So I really want to pay attention to this on NVIDIA going on into this week and next week. But I think this could really play out. I really think we could see some bullishness come in early on in the week, but I'm open to all scenarios. And I think that's what the bond market is telling you. It's telling you, hey, we do need to start to price in the fact that they're not going to give us, 175 basis points. They said 75 basis points, which would, really cause a reaction to come up to this about 4.362 area, which if it gets there really quick, if these move pretty fast, that's what really puts, the tech stocks in some trouble. So we could see some pullbacks in tech stocks with that. And if that does break down, people will see that as bullish initially. daily. But as we see on inversion, then we could actually see, the rug pulled, right, when everyone gets bullish, if we do get, a new all-time high with the SPY. So this is just something that I want to pay attention to, but it looks like the bond market is telling us, hey, these rates might go a little bit higher because the FOMC minutes might pull us back to reality a little bit. Now, we do see those rates go higher. I think you have a good shot that they're going to come back down pretty quick. Okay, the reason I think they're going to come down is just because you're seeing TLT give these divergences on the RSI, but not the MACD at the same time. So the technical side is kind of telling me, hey, TLT is going to experience some kind of pullback, and maybe that is to come to that 50, right? Test the 50, which just tells us those rates are going to go a little up. But that doesn't mean that everything has to, crash to oblivion at this point. Really looks like TLT might just roll over on a daily and then roll back up in positive territory. And we can see another push in TLT, bringing those rates down even further, most likely with those rate cuts coming in the first quarter. So I'm going to pay attention to the FOMC minutes because it's also maybe going to tell us when they see that first rate cut coming in. It's such a good week to pay attention to, but the technicals right now are telling you that in TLT, you're going to see most likely just some kind of pullback and then head higher. Next, you still have that tightness of the Bollinger Bands, and you do have the opposite of NVIDIA. So this isn't the strongest reversal candle, but we can see some volatility come in because of it. I'm more leaning towards maybe some bullishness coming in and coming down to that 12-12. We've talked about this 12-12 before. We were talking about it right around here. Hey, I'm going to be a little bit patient and wait for us to get to that 12-12 because that's where we really see those volatility spikes come in. So that would be very nice as a trader for that to come down to 12-12, make some things pretty cheap for you on the short side if you wanted to just, hedge a little bit, and then we could see some big volatility come back in. So the reason that we're saying some big volatility could come back in is because this weekly is setting up a divergence, okay? So we really want to pay attention to in January if this is able to actually confirm. That's not what I'm necessarily leaning towards, but if this does confirm, then you would be getting into positive territory, meaning volatility can get into a positive trend. And that can mean that we have some extreme downside coming. It means we could have some kind of bear market coming when this does occur. But right now, I think, maybe, halfway through January or a little bit more than halfway through January, we see that about to cross, and then we actually see that fade back down. So if that does fade back down and this isn't able to cross, it means we might have bought ourselves a little time. But in 2024, if this does end up crossing over sometime in the first quarter or even going on into the second quarter, it would be, a big signal that some some very big volatility is coming. Lastly, on this channel, we do pay attention to HYG. It does give you some good hints, some good insight into what the market is going to do because it reacts before the market. And right now, the overall thing that I'm noticing, yes, it crossed on its MACD, so did the SPY, so did the Q. So a lot of things have crossed on their MACDs to the downside, but the SPY actually was able to buy back up to where it's like right on its 9-day moving average. The HYG is actually closing at the lows and closing firmly below the 9-day moving average. So that's what I'm paying attention to, HYG, and I'm going to update you guys on this throughout the week. So the main takeaway here is it looks like some kind of pullback is going to happen, and it looks like we could really cut below those monthly risk ranges before we see some bullishness come in, possibly with earnings and maybe with some kind of rate cut coming. We just want to pay attention going on into next week's because there's a little bit lower volume and because we have FOMC minutes that could really shake up this market. But these things do take time to play out. So that's why I'm paying attention to the VIX and waiting patiently for that weekly divergence to actually cross and get into positive territory. Thank you guys so much for watching. I wish you guys all the luck in the world in 2024. You guys are always liking, subscribing. I really, really do appreciate it. And I look forward to making more videos throughout 2024 for you. I hope you guys had a great, happy new year. I hope you guys have a great night. Peace.